What's up, my peoples? Good morning, good morning, good morning. It's time to go ahead and get into it. Take these alarms off. We coming with a clean, fresh chart today. We're going to just see how market structure can play out. So, today is Tuesday. So, what am I doing when it comes to looking at the market? Well, I want to look at the higher time frame. So, today, I'm going to start from the 4 hour. Just get a perspective on what's happening right now. So, we had that daily and weekly consolidation. So let's look at the weekly one time just to kind of get a refresher. Turn this on. Let's see. Nah, you good. It's just the opportunity. Wait for the next opportunity to come. Um. Okay, so looking at the weekly, we see we got this push up out of the consolidation. So we know that we're in this week right now. If you look at this week so far, this week is very small in retrospect to last week. So just looking to see, is this candle going to close out this imbalance, or are we going to push down to close out this imbalance and then from there kind of fill it, kind of just sit inside of the consolidation? Well, it's based off how we see the market and how the market is playing out as we go throughout the week. So just keeping in mind that we are in that weekly consolidation. And from there, let's go ahead down to the daily. Okay, just to get a refresher on the day. So we're getting this clear expansion to the upside, and price is now rebalancing this candle here. So basically, there's no busy here, or there's no floor here. It done closed that, so now we have our next stop, which can be this floor right here, or busy. So just looking at this, just to get an idea of where we're at. This will be daily. Okay, and then from there, we can hide this because we know basically where we're at in market structure right now. So now that we have down the daily, drop down to a 4 hour. Now let's make this make sense. So looking at this 4 hour, we see that we had this push up. We had this high that was taken out. So if I went, grab my toolbar, put that up here. And there we go. This high was swept alongside this low. So if we look at it from this perspective, we're basically in this range here from high to low. And then this also has this 4 hour floor here. So now from there, we go down to a 1 hour. Just make sense of what's going on when it comes to this market structure. Also looking at this long wick out of this daily imbalance, but this 4 hour wick that's expanded out and then we'll go back inside. If price wants to go below this floor here, then we can look to fall inside of this wick here in the midpoint before falling into this floor right here. So we have a couple stops when it comes to price action for today. So let's just mark this one up. This is going to be 4 hour. And 4 hour. And then we're going to say MP or midpoint. Okay, boom. It's also labeled at 4 hour MP. All right. So now we have all this into perspective. Let's go to the hour. And let's tie it together. So we have Asian range low taken out this morning. We have that 4 hour low that we've seen getting swept here. So if we look at it, it'll be from this high to this low, and we're inside of this range right now. So price is just pushing to the downside. So if we look at it from a daily range perspective, before we had the break on either end, it would have been like this. So based on the opportunity that you're seeing, You're either catching this falling down, or you're waiting for a price to find some type of foundation in this discount to push to the upside. Asian range is right there, right at the high not being taken out yet. So just seeing that, I do know that we have basically this roadblock right here that sits right above the midpoint inside of a premium that price will have to fall into, which this wick went into. And then from this wick, we drop to the downside from here. So just knowing that we're in that range, want to see how price is going to turn around if it does. And then from there, we're able to capitalize. So just knowing where we're at is the main thing. And right now, this is the key dealing range. The reason I didn't move it up to this high or move it down to this low is because we wicked out of both of them, this low and this high. So looking at the bodies of the candles, I'm just keeping it in that range or keeping that range the same until a body breaks out. And remember, we got this from the 4 hour going down. So I don't want to move it because the 1 hour, 15 or 5 is telling me that it broke out. You want to see from the 4 hour down. So just waiting to see how price action is going to play out in this perspective. And you can use the same range from the hour down. So looking at that, we have price here. Let's see what's going on. Oh, we have this big push down, big push up. We have this inversion right here alongside this confirmation. So if you use that dealing range, it'll be there to there. So it falls right into a discount from that range. Right there. Just tapped it. So that's something to look at too. Okay. So seeing right now we're just sitting inside of this BISI. Just waiting for market to open in the next 5 minutes. And from there we'll tackle the day. Let me cut these. I have to go to a cut scene real fast, and then I don't have to do. I can just do it like this. Let me just do this. Turn this background music on. There we go. All right. Let's get it started. So right now we're just waiting for the market to open. And once the market opens, we look for opportunities after the fact. So now we're just sitting on our hands waiting. Now we see that we have this BISI here, but you're focused on this will be overall price. If you're focused on current price, we just rebalance this wick right here, which would have created that civvy or the ceiling for the continuation down. So it's closing the imbalance inside of this range. So I'm just looking to see how price is going to set up as it opens, and then from there we'll follow the order flow. We don't have anything on the hour besides those imbalances that's current. So we want to focus on 15-minute price action, which we see we have all this consolidation right here. So seeing we also have this here off this low, so we have this inversion. So 15-minute inversion. inversion there, and then you see right here, see I got this consolidation right here. This is something you can kind of monitor. And then you can actually just measure that one, because that's what it's in. Just go from here to here. Same one we've been using. Go there to there. So this would be 15-minute consolidation. Okay. So remember, we see this breakout, but on the hour, that's just a wick. So don't lose sight in that. So you see how you have this inversion right here in the 5-minute? Then you got confirmation right here. The 5-minute. But I'm waiting for it to be in sync as it goes down. So you see how you have that wick. You guys still see my stream? Is it working now? Okay, you can see, y'all can still see my screen? Okay, cool. I had opened Discord on my tablet and my computer by accident. Or I clicked the join stream. Let me not do that. Oh, we can't see the stream. Okay. Okay, let me see. Sorry about that. So far, it's been a very lazy market. Nah, man. I'm not leaving no man left behind. No man left behind. That's the rule. Literally, this price action has been so slow. We haven't had a lot of volume, but you got to be able to sit through stuff like this to have those bigger days. And when you have those nicer days, then you'll be able to appreciate them. You got to deal with stuff like this. Market open up, not really going anywhere. Now it's like, okay, are we going to deal with consolidation? So what I see right now is we had that push down, push up, push down. So you had this back and forth here. Price pushes up. You had this back and forth right here. Price pushes up, back and forth right here. They started to do that same thing again we did yesterday. We're starting to just kind of get bunched up. You can't just jump into that. Yeah, but I'm gonna stick to the same time. If I don't find nothing within this time, that's my rule. Like I said, you have that 5-minute confirmation down there. But looking at the 15-minute too, you don't have any confirmation on the 15-minute. So even if it did go down to that 5-minute confirmation, it's just like, depending on the risk, if you're willing to take the risk, then that can be your opportunity. But just knowing that the 15-minute is not lining up with the 5-minute as of yet. We have an inversion, which is good, but it's not giving us any confirmation. And then you look at the hour is still making that swing point, that swing low. Because technically that swing low hasn't been made yet, this candle is still printing. Consolidation right there in the hour as well, inside of a discount. That's somewhere else price needs to go above and then continue up, but it's right at the midpoint. So you have this area where price is just back and forth, and that's where the patience comes in at. Because this is the same market next week can be going super crazy on the open. And the session right before, so that London session going into the session can be super slow. So depending on what the market is giving you, take what it gives you, walk away. guys doing it, let me go take a look at gold real fast. We also trade. Let's go. Price is the same thing every single day. Bad. Alright, so when you're seeing price push up like this, and you're antsy on trying to get something, that's probably because you're only focused on the 5 minute. I'm going to be a lot more patient with my trades if they're not lining up from the 15 minute 1 hour down. But majority 15 minute. If you're going from the 15 and down, and the 15 and the 5 are not correlating, or the 15 and 3, they're not correlating, then your odds of that playing out what you're seeing, it's going to be a lot harder to get in sync. And even when you're in sync, you could be out of sync real fast, and it gets back in sync. So I'd rather it line up the right way and then be able to capitalize off of that than just taking something because there. You want to take the right trade. That's what it's about. So as I see price pushing up going for this high, what I'm looking at right now is this eyeballing is this wick right here. Because we broke above it once. Seeing how price is playing in this key area. So my main focus is not price stopping at the midpoint of the wick and then pushing down or up. I'm just using it as confluence to see that I'm inside of this down close imbalance right here, CIBI, or you can call it ceiling. I'm inside of that, and I'm just trying to see, okay, I know what the midpoint is with that, and the wick, the midpoint of the wick are pretty much the same. So in this case, is price trying to hold itself down to sit at this consolidation and then take off, or is price willing to go back, push back up, so we can get a 15-minute confirmation, come back down, then push up? Because like I said, you do have this here. You can let price come back down to here, and your opportunity can be here. But you have to know that you don't have 15-minute confirmation, so price can very much just smash through that, push to the downside, back into that 15-minute consolidation. So if you're not weighing out your trade, your options, then that can throw you off by a lot. And then also, let me take this wick, keep it on the. So you see how I have this wick on the 15-minute, and then I have this one on the 5. I measured it on the 5 minute, so keep it on the 5. That way you won't get confused. Because even in this scenario, you have all these wicks here, and then you have this wick right here. The reason why I'm not measuring this, the midpoint of this one, because I kind of see where this one can stop at on the 5 minute. And then on top of that, we're already above this imbalance anyway to confirm an inversion. So I'm already looking for price to push up to the upside on the 15 minute to give me that confirmation. And if not, it just pushes to the downside, then we can just run for that low. And then if it starts to run for that low, and this is what price wants to do. So based on the range that we're in and the range that you're looking at, because you're either looking at the bigger range here, or you're looking at a smaller range, being more in current price, and then from there looking for a range inside of there. Now for current price, as of right now, what you will have is pretty much this high here, and then it will be this low here. Because this low falls out of this CIBI. So basically we had this CIBI, we made this swing low inside of the CIBI and pushed out of it. So this is a swing low that pushed up, took out this swing high right here and made this new high. So this can be a premium for right now, and then price can push to the downside, targeting that low. And then you have inversion, confirmation, initial stop loss, and then that is about So you're looking at, let's see, initial stop loss has to be at least 14. Let's call it 14 points. Take profit will be 30, so 31. Let's give you a 1 to 2, and that's bare minimum. So with that trade, based off the risk and based off where it's at, that's not something I want to be jumping in. And then also too, I'm waiting on the 15 minute, but that's still opportunity nonetheless, because that's you seeing how it's playing out. So let me show you one more time. So your initial stop loss would have had to be here. That's 14 points, targeting that swing low here, 30 points. So for a 1 to 2, 2.1. So 1 to 2 will be here. And see how close it is. This stop loss is how close it is to the initial stop loss. You want trades to where it gives you enough wiggle room so you're not so far from it. You can still have things like this happen where it wicks it and it goes the other way. That can 100% happen. But when it comes to my risk, the initial stop loss, I don't want to be super close to it. I don't want to be hooked up on it, because that's showing me that's the bare minimum of what I can risk. And I want my trade to have some wiggle room. So I want to see that accordingly. And then in this case, if you're looking for the opposite opportunity, this will be the buy one, where you have the inversion here and then confirmation here. But this area for me is just consolidation. So that's why I'm not trying to participate in this area. And then look at the 15 minute. You just got to push up and then this down close candle and this wick back and forth. So if you're seeing this and feeling like you have to take something, or you have to take that trade or that setup because it's the only one that's going to be available, then you're not in the right mindset, because you're jumping at anything, because you have a lot of things telling you just wait to see how price can play out. Now, if that's your trade, then take it based off the risk. If you like the risk, then okay. But it's all based off of that. So like in that case, this here, that there, you got initial stop loss at first had to be 6.5. Target these equal highs. The high I just made, because it just went tapped that high. So now a 1 to 3 is here, and this can be your opportunity, taking it to 22,821. But you have to know that you don't have confirmation on the 15 minute yet, but you're expecting the confirmation based on that initial push up, and just going off of that. So now let's say this is your trade, right? This is the one you took. You see it's coming back to this 15 minute inversion. At this point right here, you're nearing a 1 to 2 already. Based on the trade and how the trade is playing out, you have to ask yourself, like, okay, depending on how it's playing out and how price is pushing up, am I super confident in this trade going to a 1 to 3? Is it cool for me to take it for a 1 to 2? Or should I wait for a 1 to 3 and then take that opportunity? That's all based off perspective on what you're seeing. So remember, even though you're taking it off of a 5 minute and the 15 minute hasn't set up yet, you're taking it based off what you want to see the 15 minute create, which is that biscuit or that floor. But if you're not looking for price to do that, then now you're waiting for price to go a lot further. You're looking for it to just run off, and what if it doesn't do that? So you got to know when to cut it, when to close it. So like you see right here, this would be a 1 to 2. Then you have a 1 to 3, which is here. So if you've seen a 1 to 2 and then you start to see it pull back and you don't like it, then that 1 to 2 could have been yours, and you could have closed out and done for that moment in time and come back with that 1 to 2 and see if you can capitalize off that 1 to 2. But that's based off the fact that you don't trust that the 15 minutes is going to play out as of yet, because the 5 minute is not in sync with the 15 minute. If we're waiting on 15-minute price action to line up. So in that case, it's like, man, this is how you want to manage it, because you're sitting like, man, should I take it? Should I close it? Okay, it's bouncing off the inversion. I don't like it. I don't like what it's doing. I don't like how it's acting. Yes, you could go to a 1 minute chart, but look at how it's playing out, and then from there you build off of that. But let me show you guys how you would follow that. So see how you have this push up, this consolidation, expansion down, and then you have consolidation here, back forth, back forth. We broke that consolidation here, pushed back above with this inversion, and then this confirmation. Price fell inside of that, and that's giving us the push to the upside. So you want to see price aggressively punch through this consolidation to continue up. But remember, your directional bias is up, but why is it up? Because you're looking for that 15 minutes to create that confirmation. So you need those bullish candles to create that confirmation. And then from there, that could be your opportunity. So there's opportunities everywhere. It's just which one are you willing to take based on the risk. If the risk is cool for you, then that's your trade. But if it's not, then you walk away from it. Here's your 1 and 3. Right there. So let's go back. Okay. Question for anybody. Anyone take that trade? I said, did anybody take the trade? The trade that just happened, 1 and 3. Okay. Okay. Everyone open, activating it, and hit confirmation 3 minutes. But hesitated and now look. Ain't nothing wrong with that, man. Either you're waiting for something to happen, or you're playing off of the risk. So that's why I'm sitting here and I'm like, there's something you could take based off of the risk that you want to equate to your trade. But I'm waiting for the 15 minute, because this can be a continuation. Price can very much just do this pullback for continuation and continue up. For the 15 minute, in order for it to get the confirmation, it's another 30 minutes. But look what price has created right here. It's created what? Consolidation. So, and then what are you getting out? You're getting expansion. And then think about it. Think about this. If we're looking for the 15 minute to create a BISI or a floor, what does it need to do? That middle candle needs to be what? Expansion. So in order for us to even get that 15 minute confirmation, we need expansion, and then we need the next candle to close with that gap for the imbalance. And then from there, boom, you have our 15 minute. Now the question is if the 15 minute ever pops up, then you say like, man, I should have took the 3 minute. But if it's not your rules, then you shouldn't have took it. But you're telling yourself you should have when you shouldn't. And all that plays a big, big part. Okay. Wait, Zach, you took this one? Let's talk about it. You took this one right here? You said 9:30 for the open. Oh, okay. Cool, cool. So are you aiming for this high right here? Yeah, man. And the opening is funny, man, because like I said, like I was saying yesterday, is you can have a market like it's been for the last couple of days, was opening, and it just slowly moving, and then you change your whole way of looking at the market up because of how it's opening, and then you like, man, now I'm gonna do it earlier because it's not opening right, it's opening slow, or you tell yourself like I can take trades at the open because it's opening slow, and then it starts opening quick. Now it's like you done adjusted your whole way of looking at the market because when you adjust something in your trading on how you look at the market or the time you trade, there's a whole mental thing. Like even with me, like my patience right now for me taking trades is not due to the fact that I don't see nothing. Like I said, I can call them out to you guys all day. Is I'm used to a slower market as I'm getting into my trade. So this for me is normal because this is how usually how the AM session is. Like at 6 o'clock when I'm going to the gym, and then from there I'll just have my trade, let it play out, let it ride out, and I can close it pretty easily and then walk away. But now that I'm dealing with market opening, I'm a lot more of a hands off until I see like a nice size setup, and then from there, then we'll capitalize. But I don't want to lead you guys astray by just taking anything because you want to see it first. So if I'm able to narrate how prices playing out and show you guys a bunch of opportunities and then opportunities that you see, you can take it based off the ones that you like. But my patience is coming from that, from me moving from trading earlier to now trading the market open. You have to be careful, man. Especially with, I would say, S&P 500, YM, which is US 30, NQ, and gold. Those four pairs, if you're trying to trade them on the opening, and you don't have a lot of experience in knowing where the market is at, being in sync at that moment in time, you can have a couple good trades, and then you can have just bad trades, like super bad ones that play on your mental. And that's what I'm preserving right now, my mental capital. That's more important to me than my actual P&L. Because if I don't have the mental capacity to keep going, then you start to deal with tilt. And that's a whole other ballgame. Because tilt is crazy. It's the weirdest thing because you don't realize you in it until you out of it. And it's like, what just happened? What did I do? Why did I do this? Why did I do that? And you have all these questions for yourself, but the only person that can answer them is you. At the end of the day, you can seek help for it, even talking to me about it. Like, you can talk to me as much as you want about it. And I'm going to tell you things to do, things I had to deal with or endure to that point. But majority of the time, it's going to be something you're going to have to fix on your own. But the thing is having a community or a group of people or somebody like me that you can talk to about it, that you can vent to. And I think that's very, very important. If you're not exercising that, of just letting off frustration when it comes to the trading and things you're dealing with or encountering, and if you're just bottling it all up, it's not good, man. Because that can equate to a bad day, a couple bad days, a bad week, a bad month, and you not even realize it because you just simply ignore the fact that that's still happening. So those bad days that you're having, and if you're not just saying like, okay, you just kind of like, it was just a bad day. It's cool. My bad days, I'm studying. My good days, I'm studying. My break-even days, I'm studying. My lives, I'm studying. All those things. Because I want to become more patient. I want to become more disciplined. Even though I feel like I'm disciplined already, I want to become more disciplined. Because those equate to bigger trades. And you want to handle a lot more. Like my goal for myself right now by the end of the year is to be able to manage 10 contracts. 10 minis. All right, right now I'm at 5. I can do good with 5 based on the risk. But I want to get to 10. 10 is a nice, decent number for me. And then I can have a couple of days like that and be done for the week. So if I'm doing 10 contracts, I'm probably going to do two trades a week, probably. And they got to be like 8++, but take those and be good for the week. but you do $500 trades for a whole week. That's 2,500 a week. That's 10 bands a month at 500. And then with that 500, what are you risking? So you're coming into the market risking about $150, a little bit over per trade for 1 to 3. So even with losses equated into that, if you even was able to manage half of that for the month, isn't that still a good month? So it's all about perspective on how you look at it. If you want to hit the ground and you feel like every trade you have to be a part of, you're only gonna get yourself smoked, man, for no reason. For no reason at all, because you want it to happen so fast. Goes the same exact way. Same exact way. So this 1 to 3 has happened. So the reason I still have it on my chart is because I want you guys to see how we're breaking out of it. We're coming back to this 15-minute consolidation and this 15-minute inversion at this 5 and 3 minute consolidation. We're bouncing off of it now, but you see that we haven't created that imbalance as of yet. Like we said, it's gonna take another 15-minute candle, but based off of the next 15-minute candle, look at how price is going to play out. So don't let things make you fearful or scared of market or how the market reacts. Like right now, all this back and forth wicking, I feel no type of nothing when it does stuff like that. Because I'm literally so used to the market open up and just doing weird stuff, settling out, and then just going smooth. So when it opens up and does like weird stuff, if you're in a trade like that and it does stuff like that, you need things to see where can it get to real fast, and that makes sense. Like for instance, with this, when it opened up and it went back and forth, your eye is watching this floor right here, which is this. You're watching it the whole time to see if price is going to break out of here, but how it's reacting to this area, more so than how it's going to close, because it's still got 2 minutes left to this candle close. So you're just watching price action and see why is it acting like that. It's wicking back and forth, but it's sitting inside of this consolidation as well. And you have this consolidation right here. Because those little small 2-3 candles of a nice push up, that you can look at that like consolidation, even if it's not a big move. Don't let the market fool you, man. Don't let it trick you out your position. That's why we have the hour pulled up and we have the 15-minute pulled up. Because the 3 minute is showing you that it wants to go up for a continuation. But you're seeing the back and forth, and that's what has you like, oh man, I don't know. And then something else too is knowing that this was just taking off. There. That did that there. So now we're in this range from this high to this low. So this is all inside of that price leg. So you really want to see how we're going to break out of this price leg. But we're also trading in this consolidation inside of that price leg. So is this a good opportunity for you to be trying to trade in? Could you go down to a lower time frame and make it make sense? Yeah, of course. But if it's not making sense all the way down, like for instance, like if the 15-minute was just bullish and it was like clearly bullish, if you had something like this that's happening on a 3 minute, you don't have to jump to conclusion. You could just wait for things to settle and then say, okay, I'm waiting for something to bottom out, or in this case, a low to be taken, or some type of imbalance to be filled, and it makes that swing low. Price probably comes back, takes out that swing low, and then we have to go for a continuation. So you could do that. But for the most part, you want to know where you're at. That's why even though we have this high and this low inside of here, that will be like external range, because that's the overall price leg. If I look inside of the price leg and see what's going on, then I would look at this low right here, because remember, this low is inside of this visit. And then we had this push up taking out this high right here from this low to this high. Then price made this low, we went down, we pushed up, swept that high right here, swept it, went down, swept the low, then pushed up, swept the high. So what does it want to do now? Come down, potentially sweep the low. And then what could that fall into? This low over here. And then what could price probably do if it suits this low? And push back up. That's an if this then that. But if something doesn't happen the right way, then you're able to counter react to what's going on and not just jump to a conclusion. Look. Yeah, already. Time frame. My big screen is on, so you have, this will always be to the left, will always be 3 or 5 minute, and I'll keep the 15 an hour onto the right. So for right now, the hour is at the top high, and then the 15 minutes at the bottom low. Let me make it a little darker so you guys can see it. Watch how prices playing out. Yeah, it's a good series. This is where everybody gets tongue twisted at, because they're just waiting for something to happen. But look at the 15 minute. Look at the hour. You got all these wicks. All these wicks here, these wicks here, these wicks here. You got all this interference within price already. So don't let price come to you. The micro and mini chart are different, like slightly. They shouldn't be, but they're different contracts. The micro contract is a lot thinner, but price action is pretty much mirror to mirror. It'll be like a slight different. Maybe some imbalances are probably different than others. A wick is probably like a tad bit smaller or longer, but for the most part, it's still the same price. So there's that push back off of that 15 minute. Well, look at the 15 minutes up. Let me take this off now. We don't need that. Let's take this off. Trying to keep less things on my chart as possible. And now that we took out this midpoint of that, was it 5 minute? Yeah, that 5 minute wick. I can take this off now. Price action. Yeah, it'll look a little bit different. Yep. Okay. Now, who feels like they will be a part of this if we wasn't live, and why? Matter of fact, I'm about to make it to where you guys can talk through the stream. Let me change that real fast. We can have a conversation about it. Wait on price anyway. Okay, it should work now. because I really want to know who would get chopped up in this, and what's your reasoning for it if you would have had one. Because usually with stuff like this, you don't know you're in it until after the fact, and then you look up, you're like, dang, the mic is still disabled. Shit. Let me see. Okay, try it now. Yeah, it should work. Let me get that checked out. There's that bounce back off that. 9-10, so it's 10-10. So watch and see how price is gonna react off that. Watching the rejection. So it's rejecting. Remember that 15-minute, we still have that inversion. Right, just haven't pushed up yet to create that expansion up. Now I had this little gap within price between the two, these two candles. So see, the price wants to go above that. But how does it punch through it? Does it get there and kind of sit like how it is now? Or is it going to punch through it? And usually when it punches through something, look at the time. It usually does it like a quarter till. So like if it's an hour, it probably do it 45 minutes into the move, and it'll probably give you that punch. The last 15 minutes. It's a 5 minute, like wait till like the last minute and a half, minute and a quarter, and it'll punch through. Like because the chart is always moving, like how you see the power of the hour. I would separate it from day to day, and then you have the middle part, which is kind of the expansion, and then from there, it's either going to fade out into the new day, or it's either going to fade into the new day. It's the same way looking at every time interval. If you have an hour, separate it by quarter points. If you have 15 minutes, same thing. 5 minutes, same thing. But just looking at it like that, in that perspective. My trade right now, I am up $600. I'm closing. So when it came back down, I seen this here. Same thing we've been talking about. The first initial drop down, I didn't take it because I was just looking at it. I seen how price was playing out. But watching how price came back to that 5 minute and bounced right off of it, stop loss is right here. Because this is the initial stop loss that it has to be at, and this is a swing low that I already made. So from here, trade was 750 there, targeting this high. So it's a 1 to 4, but mainly it was because of the risk, and I'm targeting the high. So right now 1 to 3 will be here. Will be here. But just like that. And why was that a good opportunity for me at that time? Because we came back down to that same one again. And then I'm already anticipating price pushing up for that 15 minutes to create that expansion up. So it didn't initially go down and spike down. If price really wanted to go down, it would have spiked down initially the first time, and it didn't. So just watching how it tapped it, stayed there, and then pushed up, price was trying to show you what it wanted to do. Crazy. Now we're going to take out this consolidation here. The question is, are we going to push above it? Because now look at what's happening on the 15 minute. Look what we're getting. Look what it's coming back to. Did anybody take it when it came back down? No. That same play was in play the whole time. It never failed yet because we never broke the initial stop loss. It came right there and stopped out. I was okay with losing 10 points. These lights so bright. Oh, we just tapped it. We just tapped the midpoint. So price can very much just pull down right off of that if it wanted to. Then kind of wait and then shoot back up, or this can be a push to the downside. But that's just based off of if this, then that. Because what is the 15-minute doing? The 15 minutes coming off that consolidation. Let's see, they created imbalance on the 5-minute. Tiny one. Super tiny. Did it? I think it did. So there. There. 5-minute. It's like, what? Watch it. Paint dry. See how it went straight to the midpoint and then dropped straight down off the midpoint? Crazy work. Crazy work. Remember that initial stop loss is still here. You gotta be careful though. Look at it from a market structure standpoint. You had this swing high taken out by this push up, but this push up was this swing low. Just waiting for price, man. No problem, man. He don't sit. No, man. Just reading price action, man. Close right off the midpoint. Now look where we're trying to go. So then you ask yourself, how was you able to see this? Because we seen the 15-minute never gave us confirmation. He's trying to go forward. Trust me, I'm gonna think about it, man. I gotta teach at 4 to 6, 8 to 10. I've definitely been thinking about it. God bless America. No other place. Crazy. Came right to that consolidation, that 15-minute consolidation. Right there. Taking out that liquidity. So if this, then that. So we seen that the 15-minute wasn't giving us the confirmation. That was your clue right there. Like, dang, price may not be doing what I expected to do, but you still can get in sync. That was me being in sync. Catching a small opportunity, closing the opportunity, seeing another opportunity based off of what's transpiring and going off of that. Everybody takes me asking what the market doing. Now see how we getting that bounce off the consolidation? Now you want to say, okay, is it actually going to bounce off of there, or is it going to dig deeper into that consolidation? Because this is a higher time frame imbalance. I believe this is a daily. Yes, daily. Daily. Is price going to take down into that consolidation, or is it going to push back up? Who knows? The other thing, you see the swing low right here? We took out the swing low, but look at the body of the candle in comparison to the end. The swing low here. Bada bing, bada boom. So what is that showing you? Oh, price can potentially probably push up from here, and then from there, grace with another opportunity. Because there's one thing that's still there, and it's that Asian range high. Still there. Did he go for it today? Maybe. Let's go 3 minute. 3 minute had a small sippy right there. There we go. That punch right back down into the confirmation. here at 22,737. 22,737. Now you see that huge jump up we had, and then it pulled right back down. That's price. Oh. No confirmation, and gave us context clues, everything we need to know about why this transpired. Bouncing off of that consolidation. We're going to break the low and continue down. Watching this time frame, looking at the 15-minute, look how everything is transpiring. We're just digging into that imbalance. Where's the midpoint? Crazy drop, huh? And we've seen it from the very top of the drop. Show you guys management of the trade. So as price is pushing down, same thing we were doing as it was going up. You're either focusing on a couple of things. You're focusing on swing lows being taken out in the midpoint of the swing low, imbalances like this ceiling right here or SIBI, and then as you have pushes up inside of the imbalance, that swing high now becomes attached to when it takes out a new low. And then if you had a dealing range, it'll be from that high to whatever this low settles, and price is steadily pushing to the downside. So you're just watching price as it goes down if you're managing the trade. Watching swing lows, watching imbalances, watching how it's playing out as it's riding down. And that gives you confidence in holding your trade. Because all this started from us knowing the 15-minute. Clean trade, clean. And clean as in, is there a model? Model is not, then technically say that's a clean trade. The model just saying the model is there. This is a clean trade because how it went to the midpoint and just tapped in to premium by hair right there. Tapped into it by a hair and it's dropped to the downside. So it showed us the sign of wanting to go back down after it took out these highs, targeting these lows and then for continuation. You see how we had that 5-minute marked up as that imbalance. The price broke below that and it's continued to the downside. And this was the continuation for that time period until it stalls off. But this is a daily imbalance, so looking to see when price is going to turn around from here depends on when it wants to. Bad as I can see a message. I had 10 minutes this morning. 10 minutes. Let's look at the 10 minute for that. It's all in the folders right now. 10 minutes. Said talking about this one. what that one's at. Taking this high right here. Targeting that low. Bingo. Yeah, man, just like that. And that's what I'm telling you guys, like, when it comes to the trade, don't overcomplicate it. Don't. Like, you seen I had rules set for looking for a trade on the 15 minute for the buy. But the sale was clearly telling us it was there. Why? Because the 15 minute wasn't trying to make that confirmation. It just kept filling the imbalances. But if you always take a trade right after the inversion and that's it, you get stopped out. Because you're not in sync with price. You think it feels like you are, but you're not yet. Yep, so did that. Then look what our marked up. Look at that. Right to that midpoint. Yes, sir. Clean. Okay. So pretty much now, price is going to push, so we can end 15 minutes earlier than we usually do because price is already expanding. So from now you ask yourself, let's say you didn't take a trade yet, or you haven't had an opportunity to take a trade yet. I tend to always use a 25 point stop loss. So yeah, you've been in money. 25. So 20 would have been here. So you've been good. You just had to target this low. That'll give you a 1-to-1 right there. So if you would have had used this low, that would give you a 25 point stop loss, which would have been. Yes, sir, man. But so yeah, whenever you have a trade like this, or you haven't taken a trade yet, what do you do? Well, obviously you sit on your hand, but now you're asking yourself, what are you waiting for? So what I'm looking at is you have this 15-minute consolidation here, right? This 15-minute consolidation is broken with the 15-minute candle. So this very next candle, you're trying to see how price is going to play into this consolidation. And then from there, this can be a general area where you can start from. So you can find consolidation, you can find the right imbalance or something inside of that area to start from and then go from there. You don't have to necessarily fall from here because this has already happened. This push down. So if price wants to break it back above this and go back up, it's going to run into this low, get to this midpoint, and then if it surpasses that, and it continues up. And then from there, we'll run into this consolidation right here of the low of this dividend. But if price wants to continue down, it's going to find some type of support inside of here. Start to consolidate, probably like a 5-minute or 3-minute. Have consolidation inside of there. You look at the 15-minute candle, it might create a SIBI. And then inside of here, and then that can show signs of continuation to the downside to target the low of this imbalance. But look how we're retesting the midpoint of this imbalance as well. So all that goes into perspective when you're looking for your trade. Every single time. And it's something you definitely don't want to overlook because you can overlook it quick and forget to pay attention to it, or it's not as obvious as you want it to be. You gotta let it play out, especially your trades. If you have a trade idea, so you gotta let it play out. Like you see the trade out to this morning, quick buy up, 1 to 3, boom, done. But you also had a super hard sell. Do I say, man, I could have took this sell, I could have did that? Man, no, I'm showing you how to get in sync regardless of the fact. We seen this starting to play out the whole entire time because it never created that confirmation on the 15 minute. So it was showing a willingness to want to go to the downside. And then went and tapped inside of the consolidation, but it was being sneaky and went and tapped in a premium real fast, and then it dropped to the downside. So price is always planning some type of move or giving some type of story. You just have to find it. And it's not going to be easier than other days. It's not. But when you do find it, you're able to capitalize on it pretty decently. I feel like this was clean, especially at 10 minutes at clean. Something that would have probably threw you off is like, okay, it's consolidating right now, it really doesn't want to go anywhere. And then when you see something like that and that's your trade, you see that it's heading towards your stop loss, you feel confident in it, let it ride. Now, one thing is for sure, it is near the midpoint. So when you're at the when you're near the midpoint, what is at the midpoint? Consolidation. So at consolidation, it can very much smack, then go that way. So it's all based off of the risk in the actual trade itself. Seeing that we didn't have that 15-minute that was confirming that confirmation, that gave us one thing. Seeing how the 5-minute was setting up, we bouncing off that 5-minute a couple of times, and every time we bounced off of it, so we bounced off of it twice, 3 times, but I'll say twice. And when we bounced off that 5-minute confirmation, it only pushed up for so much, and then it just stalled out. That's price telling you something. Because think about it, our model is a reversal model. So once you get into that trade, it should look like this. It should be a spike one way or a spike the other way, or it may not be super aggressive, but it has some speed to it. A lot of expansion. But if you don't have that, you're like, okay, this reversal ain't clean, or this market ain't moving like it should. All those things go into perspective. So yeah, your stop loss would have been that initial stop loss would have been So this would have been your confirmation. That would have been your entry. Initial stop loss would have been here. If you're targeting this low, it was like, I think 75 points. So that means you would have 25-point risk. So your stop loss would have been above. But remember too, that it's inside of a discount. So that's also something that you're going against the market with. But look at it from this perspective. I'll show you. Take that, because the low was taken. Just expanded. Look at that. Then price drop to the downside. It's crazy how price was lining up, man. So you're talking about midpoint with dealing range? Or you're talking about midpoint of a wick? Trying to see which one you're referring to. What time frame did I have it on? Because the midpoint I was referring to right now was this one right here of the dealing range. But if you're talking about a midpoint of a wick, that would have been, I think, 5 minutes. Yeah, 5 minutes. So this swing low, midpoint. Oh, the red dot. Oh, the red dot was the initial stop loss. So look. Yeah. That's the initial stop loss of the confirmation. Yeah. And, oh, it probably looked like the midpoint of this. That's what it probably looked like. Gotcha. Yeah, that's the initial stop loss. So I'll change it to like and then now you're just waiting on this to see. So if you haven't taken something yet and you're looking for opportunity, you have to wait for this to transpire. What is it going to do inside of this imbalance? Is it going to go back to the consolidation and then give an opportunity to the downside to continuation, or is it going to break above the consolidation? Then above that CB, which is a ceiling, turn into a floor. and now be inverted, and then you use that to continue back up. And if it continues back up, then where you're looking for price to go. It should be obvious, but just how we're here. Because if you look at simple market structure, from here to here to now here. But this swing low hasn't been made yet because this candle's still printing, so I wouldn't say that yet. Oh yeah, man, we're gonna get there. Hopefully the streams are helping a lot when it comes to like having patience, waiting for the right opportunities and things like that. That's what the stream is for. Like I said, I told you guys, I don't want to come on here and be telling you guys when to buy, when to sell, because I want you to be able to see your own opportunities, and we're going to have a bunch of them. Like I had two students see the two different trades. I'm seeing the buy and seeing the sell, and confirming that the sell is possible because of a 15-minute. All this is because I'm in sync with the market. So if you can get in sync with the market, opportunities will be endless for you. And then it's just based on patience at that point, and then capital. And then from that point, you just compound what you're seeing every single day. Every single day, man. Now from here, let's see, we got 4 minutes left. Let's look at what's transpiring right now. So look, even on the 1 minute, look what's happening right now. We have consolidation right here. What's happening right now on the 1 minute? We consolidated, pushed out of consolidation, came back up into it, and now we're pushing down, targeting this low. And how are you able to determine that? Because you're in sync with the market structure. That's all it takes for you to be in sync. And then in this case, this is not the case for what I'm about to say, but in most cases, you can have a model inside of this as this is transpiring. So price will push up, take out the high. That's basically in that consolidation, sweep it, and then you start to have an inversion. Like you got an inversion here. That happened here because you don't have no confirmation, but you would have had an inversion confirmation to take the downside off of this consolidation, which would have been part of your confluence that you're adding to whatever you're seeing. But these are happening all the time, every single day. And all it takes is for you to get in sync, and then once you get in sync with the market, then you'll be able to see these moves all the time. And they happen. They're not a dime in a dozen. They happen all the time. Like this consolidation by itself is roughly, let's call it 8 point, and then this low was almost 30 points. So that's a 1 and 3 right there with the consolidation. So if you would have had a confirmation, that initial stop loss probably would have been tiny in comparison to. Probably would have been like 20 points to risk like 5, maybe 6. But you're in a continuation the whole entire time because you're in sync with the market. All from the very top as price is just trickling down. See that last minute? See how this candle closes out? So you can take out the low. See how it's going to close that gap right here. And if it doesn't close it and leaves it open, that's showing willingness to go to the downside. We have to refill the imbalance if it wants to continue to go back up. So there's the balanced price. So let's say if I was in a trade like that, I was monitoring this, I would think like, dang, it could go down, but we just close that. Let me see how price pushes up into this imbalance, or maybe to this midpoint of this wick right here. Right. But that's it for today, fellas. I definitely appreciate you guys coming out and showing up to the lives. Every day, the live is going to help you determine how to read price action and how to get in sync with the market. And from there, there are going to be a bunch of opportunities. As the market picks up speed and we get more opportunities with the market in general, as price action gives us more data. So from there, let's go kill it. Tomorrow is Wednesday. Friday, we're going to be off because of the holiday. So let's go kill it for Wednesday and Thursday. Let's get to it. I'll see you guys tomorrow at the same time.